Okay, guys. All right, here we are. So we're going to go ahead and get started today. First and foremost, let's go ahead and get you guys out to the charts. I'm choosing the right one there. Okay. All right. All right, guys. So like I said, it's great to have you. I really hope you're having a wonderful morning thus far. And today, I just kind of wanted to give the ability to let people ask questions or, whatever the case may be. But we're going to run through some pretty cool stuff today, I think. We're going to keep this extremely simple, right? That's the whole goal, is to be able to keep things extremely simple. Today we'll be talking about objective versus subjective, right? There's a big difference, as we all know. But it's not that both can't be used. I mean, it absolutely can, and I think that we can prove that. But first, it would probably help if I had my chart aligned, wouldn't it? That OCD starts to kick in. How many of you guys know about that, huh? Yeah, there you go. I know you do, man. Oh, and that reminds me, by the way, guys, at the top of your screen, let me give you a walkthrough real quick. Okay, so at the top of your screen, I want you to be familiar with the room. If you notice, there's an icon with the hand raised, little icon up there with the hand raised. So if I ask a yes or no question or attention-wise, something like that, if you want, you can simply type into the Q&A, of course, or feel free to, just raise your hand or agree for yes, disagree for no, that type of thing. So also, won't you guys give me just 1 second here? Okay. And try to bring over a chat. See if I can make this happen real quick here. All right. So just I know that's skewing your view. So, it's a double-edged sword, but give me just 1 second here. Try to get this done for you guys. Let's see. Let me see. I can do this. What I was going to do. There we go. I think I figured it out. There we go. All right. So here, I'll bring over the chat now. Look at that. We got it. Okay, so listen, first and foremost, I just want to, as we're going ahead and getting started, let's do the room real quick so that we do have an understanding of that before we do get started. I want you guys to not be lost trying to figure out what to do in the room as we're rambling on about things, right? So there's a chat there if you want to type in. Just do bear in mind, if you have a specific question, it may be more, well, I tell you what, you can use the chat if you want to. Absolutely. Just be aware, be mindful, if you will, that I do have to read or attempt to read through all of that in order to get to them. So I will come to the questions. Don't worry. If you have a lengthy question or something to that nature, you might want to type it into the Q&A. It's a little bit easier for me to follow because they just come in one at a time and I click on them, etc., etc. But feel free to use the chat. Absolutely communicate with one another. I know I know several of you guys probably have a lot to say when it comes to your own trading. Maybe you have some things you want to point out, things like that. We're open to all of that. I think as a community, we really want to hear from everyone, right? So feel free to share what you're doing today, what your thoughts are. At the end of the day, there's really no right one way to do something. There's millions of ways to do things. So it's a democracy, right? Absolutely. Okay, so that I think we've pretty much gotten the chats there in the left-hand column. Below that chat is your Q&A. Of course, you've already okayed the disclaimer there, but if you want to make sure you read through that disclaimer, of course, it's being for educational and demonstration purposes only. You know all of that, but make sure you read through the entirety of the disclaimer there at the bottom of your screen, so you have all of that information as well. The top of it, as I mentioned, the icon, feel free to use that for agree, disagree, yes, no questions, and so on and so forth, or you can simply type into the chat if you wish to. All right. Do you guys have any questions regarding the room itself? Oh, there is one other thing. I knew I was forgetting something. At the top of your screen, just above where you're viewing all of the charts, right? Just above the top of the screen, if you look there, you'll see that maximize button. It's where it has 4 outgoing arrows. If you want to click on that, you can maximize the screen size so that you can just see what we're sharing. Now mind you, that's going to take away the chat and the Q&A and so on, but you can simply minimize that back at any time. All right. Okay, I think we got the room covered for the most part. If you have any questions about that, please do let me know, but that's really not why we're here today. All right, so Scott, as long as you don't have full screen enabled. Yeah, are you saying that it is or is not working, by the way? Is it working for you? I can't really, I don't see what you guys see, so. Okay, I just covered it, he said. Awesome. I think it must have had to do with that full screen option. Okay, so great timing today, guys, on getting started because I need to go ahead and manage my position here anyway. We just we reached profit target 1 right in this area here. So what we were doing is we were looking for structure to get broken, right? This is a very good thing. It was anticipated, but we were really looking to get up into this area here. And I'm going to grab my power zone. I'm just going to pull from structure high, and I'm just going to pull all the way down to that low. If you notice right in through here at that structure high, okay, there's a light gray area there, a little bit of a bend, if you will. And then furthermore, as I pull it down, you can see how the volume starts to decrease there, right? So my concern was getting up into this area here based on my power zone. That's your low volume area. So we do react to those levels quite substantially. As you can see, we are doing that now. I'm not going to get too kind of tech crazy on you, right? I'm not trying to necessarily push you into just looking at the software. I think predominantly we want to focus on market structure and just being able to do things, with or without anything, right? We want a blank chart and to be able to achieve that. But at the end of the day, I want you to also understand that I do use the tools to benefit me. I think it's something that we all need, right? I'm only the ones who use it, of course, okay? But I just want to give you guys an understanding of what I did. I can show you real quick, I guess, where the profit target was, so that makes sense. Let's do this real quick. So you can see we literally just, as we were starting the room, I guess it rallied up and hit our profit target there. So a nice profit potential there to the upside. And again, once I got up here, all right, that was really where I started to go, okay, look, this is an area where we may find sellers. We want to be concerned about that, right? Why was I not concerned with this area here? And we'll look at that. We're going to look at a lot today, guys. I'm going to spend as much time as we need. But this, we don't want to forget about, okay? So since we've already reached our profit target, we're going to move that up. We'll come back and go through that. What I would like to do is maybe touch on some analysis, some things like that, maybe walk through some scenarios, and then we can come back to this, and I think it's going to make a lot more sense at that time. Now, for transparency purposes, there was only 2 trades I placed this morning. Another one of them was here on the euro. So again, this will make sense as well as I go through it. If I can get that done. You can see right there, that was my trade on the euro, right? So we were coming back down into this demand level. But I'm just going to tell you guys what happened on this one. A complete kind of, it's just unfortunate when you make mistakes, right? And, we all make them. It is what it is. But my mistake, it wasn't a mistake necessarily on my part. It was just, and this has happened, a couple times in the past couple of weeks. So you'd think that I would have resolved it. So I guess in essence, it is a mistake. But basically what happened was I had the long position, right? So I bought the market out of demand, looking to go structure higher. And price obviously moved in favor, right? But what ended up happening is right down here at the low, my stop prematurely moved to break even plus commissions via the ATM strategy. and I wasn't even here, when it happened. And I came back, and my position was not there anymore. I said, well, okay, that's interesting, because it certainly looks like it's going in favor. But that's what happened, just so you guys understand and know everything that's going on today. So if you hear me reference something, that's what it is. Okay, did you break structure on the 10-minute time frame? Tom, what market were you referring to? On the gold market. On the gold market. Okay, you want to take a look at gold. I don't quite know what's going on my charts here. They keep getting skewed, don't they? All right. Well, I'll worry about that later. Okay, so let's take a look at it then. So you're asking, did I break structure on a 10-minute chart? I don't even know. I'm going to be honest with you. Okay, I don't even know. So why don't I know? Well, because I was not trading the small time frame. So you're asking basically what triggered the trade. And again, I think if I go through some scenarios first and then come back and show you this, you're going to say, got it. I know exactly why I did that. So I'm going to, if it's okay, of course, Tom, if it's okay with you, I'm going to go that route. All right. I'm going to try to show you what I'm doing first, and I'm going to come back to this, and you're going to absolutely understand it. If you don't, then I'm going to make sure that you do. All right. Awesome. Hey, Chris, I see your question coming in. Give me just a few on that, because it's a general question. I love it. In fact, I know you had a lot of questions you mentioned, and I'm absolutely going to stick around until they all get answered today. So let's go ahead and walk through this as much as I can, guys. Get your questions in the Q&A there. Towards the end of the session, I will take that time to go back through them. Okay. How about this, guys? Let's start on a market that we're not, into right now. Okay. Just so you guys know, the NASDAQ has done exactly as we anticipated. Remember in the live room how we talked about price continuation to the upside, right? So if you guys remember, let's go take a look at the S&P. Actually, we can just go there from here. Let me get that chart down a little bit so I can see it. Guys, sorry about that. It definitely seems like they keep changing on me. Maybe it has something to do with the graphic or something like that. But anyway, all right, let's go to the S&P. I really want to focus in on this, guys. We have the S&P relentless, the NASDAQ relentless, the Dow, all of these markets relentless. What do we want to do? Okay? What do we want to do? We want to let this market go. There's absolutely nothing up here that's telling us that we would be looking to short the market. So let's talk about some market structure. Let's talk about some basics real quick. Basics control everything for us, guys. I know that seems like, well, I want to go really advanced. And I understand that. I really, really do. But I promise you that even myself, I get wrapped into a bubble of a way of thinking, okay? And I begin to get too involved in, order flow, just underlying volume, all of this stuff. Well, my software's doing that. I don't need to worry about that, right? And what I need to focus on the most is the most basic fundamental analysis. I guess that's kind of a contradiction. It's a fundamental technical analysis. But I'm looking at the core foundation of it, guys. That is it, literally. And when I go back to those, for example, that gold trade, you're going to see that. You're going to say, this is exactly, based on structure. This is exactly based on demand. Okay, so these things are all very basic. So and again, I'm not saying that, that I don't do it. That's what I'm saying. We all do it. Okay, or at least I guess I can only speak for myself. But we want to be careful with that, because the more we get wrapped up in the small, it's like looking at a 1-minute chart versus a 4-hour chart. You're going to clean things up on the 4-hour chart. Looking at a 1-minute chart, you're going to have 50 trades where you may have one or none on the 4-hour. So, it just depends on how you want to see things. But this is going to be relevant to all time frames. And in fact, I'd be more than happy to look at it on multiple time frames. So let's get started. Okay, market structure basics. So let's choose a direction. Since my mouse is easily going up here, let's look at market structure based on a fundamental trend. Okay, A trend puts in an impulse wave followed by a corrective wave. One would call this correction, pullback. Again, multiple names for different things. I just want you to focus on what it's actually doing. Typically, that would be followed by another impulse wave. If you follow the Elliott wave, which I do not, but there's a lot of validity to it. Okay, I definitely think there is, and it's so I think probably a lot of you do. But typically, what you'll find is that at the beginning of trends, you'll find duplicate moves, right? So what happened here? So we call this the AB or the 1-2 leg. Okay, so let's call this A to B down to point C. So from point C up to point D is typically this leg is going to be the same as this leg, or could be greater, right? But what you're typically not going to see is something like this, because if you see that, then that's a clear indication that the market's not in fact as strong as maybe we thought it was. So we definitely want to see this. Again, it could be greater, but that's what we're looking for. And again, you'll see things like continued corrective wave there, followed by impulse waves. Now, once you start to exhaust yourself to the upside, then of course the moves can get smaller, right? So for example, this leg may not be as big as this leg, and so on and so forth. All right? But should we get wrapped up in that? This is just yet another thing, I think, that it's almost too much, right? I mean, you got to focus on which leg is bigger than the other, and so on and so forth. Don't concern yourself about that. I'm just trying to give you a perspective on it. So this is just very, very typical, something like that. Maybe put in a little double top up here, and then we'll break structure. Okay. The most common way of going about this is a return to structure. Okay. So this would become a new A to B followed by C. Expectation is C to D equivalent to A to B, right? So in other words, guys, that's all this A to B, stuff. I'm not trying to complicate it. I'm trying to simplify it. So when we break the structure low there, our expectation is very simple. We will break it, return to it. All right? Now, this is a form or fashion of support and resistance. This has absolutely nothing to do with supply and demand. It can't, because we traded through it. Having said that, at those locations, what you will typically find is that in order to break through this demand, guess what we have to have right there? Supply. Okay? Supply must exceed the demand. In other words, there must be an influx of sellers that are more than the incoming buyers. So the buyers are always going to remain in an uptrend. That's just something that we have to get used to. And it is difficult, I assure you, because I can't even tell you how ridiculous the index markets are. And I keep saying, oh man, give me a turn down, give me a turn down. But every single time I keep getting pullbacks to demand, buying, and it just keeps going. All right? And until that stops, I just cannot call a top. And we looked at that. There was a video that I put out yesterday. In fact, I'll look back at the trade if you guys like. But this is the same exact scenario, right? So think about the imbalance. Don't worry about this leg being the same as that leg and corrections and impulses and all of that. I would tell you the more important simple or simplistic version is pay attention to this. Right here, we need to understand when a trend is coming to an end. Okay? When that trend is coming to an end is going to be where the sellers exceed them. So in a trend to the upside, they should never be violated. The true demand in the market should never be violated. And if it is, then that's your indication right then and there that the dynamics of the market are indeed changing. So let's remove this. Once removed, we now have this acting as resistance. So previously it was support and or demand. Okay? Violate structure, return to, gives you resistance. So over here, we can say, yeah, okay, that's, that's great, right? So what I could do is I could, plot a line as I did there, or, I could do something like that and say, I have resistance up here. But the problem with that analysis there is how are you going to trade it, right? I mean, what do you really do with that? One could say, maybe there, right? One could say, well, no, I think it should be this large, and so on and so forth. You just really, it's very difficult to define the area in itself. So what we can then do is say, okay, look, on the way down to that area, so let's say, let me grab some text here. All right, what I'm going to do here is I'm just throwing out a number here, guys, keeping it simple. Let's say that there's 1,000 buyers right there, okay? And let's say that on the way down, there's 1,500 sellers. All right. Now, how do we know that? Well, we have to see the levels forming in real time, okay? Now, how do we know that there's 1,000 here and 1,500 here? Well, we don't. There's simply no way to know that, all right? There's absolutely no way to know that. But how we will figure it out is when the sellers take out the buyers. That is, without a doubt, 110% proof that the sellers are indeed stronger. So that little level right here then becomes active to the downside, whereas the buyers are no longer. All right, so we're not worried about the buyers anymore. We're worried about the sellers. So as we can now extend this area over, and again, we are going to look at literal levels, guys, but I just want to get structure down first. So we're going to look at it this way, and a return to that gives us a very specified location. You can draw this with lines, rectangles, horizontal or lines or rays. I mean, anything, it doesn't necessarily matter. It's all about the way that you define it. How do you define your levels? Are they qualified? Okay. Has market structure told you that you have permission to do that? Things like that. All right. So again, 15 to 1,000, we look at the sellers. Now with market structure, here's where it gets a little complicated, and hopefully I can simplify it again even more. When you look at things like this, you're going to go, okay, but how many times have I seen this? Right? And you're going to bounce up from this area right here. You're going to find demand, or what's left of demand, and this is about to be very important, guys. If someone would have told me this long ago, it probably helped me a lot. But this is going to be very important. This back here is a historical level. All right? It's very important that we grab this information right here. This is historical. What has now happened becomes the most relevant. All right? Not what happened back here, contrary to many thoughts of process. And there is, again, not one way of thinking. I just have come to the conclusion that I don't want to try to guess my levels down here. I don't want to do it. It gets me in trouble all the time, right? So I could go down here and I could say, I'm going to buy at this level, right? Because it's way below price and it's, the altitude's getting lower, et cetera, et cetera. I could do that. Absolutely. But what's the problem with that? What has happened by the time I get down there? Right? Now remember, let's put some more text on the chart. Let's say back here, originally, there was 10,000 buyers. Keep hitting that Y first, don't I? Okay, so let's say back here there were 10,000 buyers. Maybe we fill, I don't know, even half of them, reducing that to maybe 5,000 and so on and so forth. So 1,000 orders, okay, I'm going to keep this simple. 1,000 orders on the departure here. Let's say you use half of them, right? So now you got 5,000 left. Now, those 5,000 buyers are just sitting there. Think of limit orders, right? Think of just literally sitting on the exchange saying, if we come back to this particular value, meaning in this case it'd be around the 20, let's call it what it is, numbers are irrelevant in this case, but let's say that if we come back to the area of 70.75 up to the 26.18 I'll be the buyer, and we have 5,000 remaining orders there. But let me ask you this. When we get there, what has changed? The answer to the question is really everything, right? Everything has changed. Exactly. That's right, Tom. And you guys feel free to go ahead and type in. I see a bunch of questions and stuff coming in the Q&A. Feel free to use that chat, guys. Like I said, make sure you guys are, all about kind of helping each other if you want to go that route. But absolutely. So you guys are absolutely correct. The trend, the market direction. And let me tell you another huge piece to the puzzle. Okay? By the time you get back over here, guess who is still sitting there? Only a portion of who was originally there, right? So these guys, and this is maybe a common misconception here, but it's not like all 5 orders remain at that level. Once they truly leave the area and they realize that they're not coming back, a lot of these willing participants are no longer willing. All right, so they cancel their orders. Just like that. They go, oh, okay, well, I was looking for a swing trade, but I see, most especially right here, we've made a new structure high, which means that this is not going to pull back that far, so I'll cancel my order. All right? Sure. Does that make sense? Absolutely. I do the same thing. I'm going to absolutely get out of that because, again, it's about the context and structure. I want to be with the most relevant information. I can't tell you guys how many times my wife gets on me. All the time. She'll tell me things like, you got to keep up with whether it's, style or this or that. Thank the Lord for her because she keeps me going, right? If it wasn't for her, I'd probably look like a bum half the time, and that's kind of what it is. But all joking aside, guys, it's what's relevant. Okay, and this is now relevant. This down move, this is relevant. Why are we taking out the buyers? Because the sellers remain in control. They're continuing to take them out. Therefore, I need to understand that I have the highest probability of selling, not buying. Okay? Highest probability of selling. Now, how many times have you seen this, though? And this is where I'm going to trick you a little bit. How many times have you seen this uptrend? You take this uptrend, and just mind you, I'm not drawing this perfectly, but I think you guys can, well, I don't want to be too... Okay, you guys see where I'm going with that? Drawing to the structure lows there. Okay, so how many times have you guys seen one trend get broken up, have a reversion down, and then this occurs? Boom. Just like that. So now you're really confused. Now you're like, hold on a minute. What in the world just happened? Because this was a downtrend, and we never revisited the lows of the uptrend, right? Because if we base this on, say, altitude, we could grab our fib tool here, pull from lows to highs, and the predetermination would be, well, let's get as close to the lows as we possibly can for higher probability buying. But I can't tell you how many times I've seen it revert 50%, somewhere in between that 38.2, 61.8 area, in that big green zone there. Can't even tell you how many times I've seen that happen. Price shoots to the upside. 2 things we want to learn from this. Okay? Number 1, most important, larger time frame. Okay? What is causing this reaction? Simple. Larger time frame. What's the second thing we want to learn? To stop selling after large declines. So I know, guys, trust me, it's the hardest thing that I have ever done is to sit back and wait for something. Okay? So you have 2 ways to approach this. And trust me, guys, we have both types in the room. As a matter of fact, I have friends who go I have friends who do it one way. I have a lot of other people who do it the other. I'll tell you, most people are going to trade every time they get an opportunity. Okay, I'll tell you that. But the ones who are patient, I would venture to say probably do almost just as well. Why? Well, because they get in at the beginning of the moves and they simply hold on to their positions. All right? So for example, let's say that we executed this short position up here. That puts you in a very high probability downside move. Okay? So you could look for a much larger reward as opposed to, say, reverting back up on a pullback down here. Or most especially down here. And the lower you go, every pullback becomes more and more and more aggressive. Less and less probability each and every time. Okay? Every time. So you want to be mindful of that. There's no wrong way to do it. I think that if you want to hold on to your positions, if you're capable of doing that and you feel that you only want to look at the charts every now and then and you want to do more investing and things like that, absolutely that's a great way to go. But if you want to be a more active trader, there's nothing wrong with playing pullbacks into supply over and over and over until it stops working. Right? Think about it. If we're right 7 out of 10 times, that's amazing. If we're right 6 out of 10 times, also amazing. Because if we're pulling out even decent reward, then that makes sense. Okay, so let's move forward now. Let's look at some larger time frame analysis, right? We're going to base it on this market structure. I promise I'm going to get off this boring stuff and move to the live markets in just a moment. Okay, so you asked me before, or excuse me, I asked myself, didn't I, on your behalf. But I was explaining before about how and why this happens. All right, this is, in my opinion, noise. So let's simplify this. Let's pretend for a moment that this right here is from a 60-minute chart. Okay, 60-minute chart. What do you suppose that this is going to look like on a daily chart? Okay, let me draw you a different picture over here. It's going to look something like this. Oh, that's my data's not going back far enough. That's okay. Okay, it's going to look something like this. All right, it's important to know about the larger time frame. Why? Because it's a correction to put us back to the upside. So let me ask you this. Would you rather be, and there's a bunch of different ways you can do both, of course, but if you had to do one, okay, if we just said, nope, you have to do one, and you're absolutely right, Felix, I see you were typing that in over there. Good job, my friend. Good to see you, Felix, by the way. So there's two things here that I want you to focus in on. Would you rather be the seller right here, which is the equivalent of right here, or would you rather be the buyer right here, which is the equivalent of right here? Which one you guys think? Which one would you rather do? Yeah. There you guys go. You'd rather be the buyer, right? So understanding the context of where you are within your time frames, massively important. And this will help you to see the difference of, should I be expecting, here, for example, should we go all the way back down to the lows, to the origin of this area? Or should we maybe have that 38.2 to 61.8 retracement and then rally back up? How do I know that information, you ask? Oh. How do I know that information, you ask? Well, it's right over here, right? It's right there. Impulse, correction. Okay? It's right over here as well. You just have to look to this picture to see it. Now, multiple time frames. How many do you use, Will? Well, I certainly don't use 10. Okay? I will use a maximum of 3 time frames. Tell you what. In fact, let's go ahead and do this. Just move all drawing tools. Okay? Why 3? Well, because A, I need to understand what the larger money in the market is doing. The large money. In other words, I need to know when reversals are most likely to take place. How do you do that? I go up to the largest time frame, and I'm gonna define those for you as well. We'll get specifics. In the course, we actually cover exactly which time frames we want to use. I mean, as with all details, but that's just one of them. So when we look at that, we want to choose a large time frame. That's going to give us I don't want to call it a bias. I don't like that word, but I think a perspective on the market, a bird's eye view, if you will. Then we can look down 2 time frames. Okay, we're going to look down 1 time frame for further analysis, but predominantly to start to add probability to where we are going to enter into a position. Now the 3rd time frame is going to be literally executing. You could even execute on that 2nd time frame. That's why I say you don't have to have 3. 2 is sufficient, but 3 is just increasing probability. Okay. Questions thus far, guys? I'm going to take a brief moment. And do you have any questions relating to what I am discussing? I promise I'm going to go back and get all those other questions as well. So don't you guys worry about that. Just take a moment here, let you get a question out if you have it. I'll take a brief pause, and then I'm going to start running through the actual markets. Okay. See if this can get some momentum continuation to the upside on that gold trade. Boy, sure wish that that euro trade would have panned out. Can you throw in some commentary about new orders added? Absolutely. And Jim, thank you so much for that. I can't even believe. Absolutely, man. Because I totally dropped the ball on that one, didn't I? Remember when I was talking about? I'm going to keep this simple so I don't have to redraw everything. Okay. But remember, right in through here, and just draw it inside the area. Remember, I was saying that there may be 10,000 buyers. Okay. And over here, those guys become 5,000 buyers, okay? And then by the time we get back over here, let's say there's 1,000 buyers, okay? Do it like that. And these are literally just, they could be, these back here are predominantly limit orders. They're just sitting on the exchange. And in order to sit on the exchange, by the way, it has to be a limit order. Okay, it cannot be a market order. If it's a market order, it's going to instantaneously get filled wherever price is. So let's disregard those immediately. Right here, we're talking about 10,000 limit orders to buy at a specific price at the high of this level or below. So anywhere within there. Okay, on the departure of that area, like that, they fill some of the orders. So let's say now we remain with half of them, but there is still 5,000 orders there. So here's what they're expecting is this. Okay, that's why they leave those 5,000 orders there, because that's what they really want to see is the rally out of that. They want to return to level, okay, make new structure highs. That's what they're hoping for. Okay, me too, right? But that doesn't always happen. So in that particular case, let's say that it doesn't do that. Let's just say that it continues up. And that, again, is where those 5,000 orders will go, oh, well, hold on, let's start to reevaluate this thing, right? And most especially, when we do that, they go, oh, hold on a minute now. I'm just going to adapt my orders, okay? I'm going to move my orders up here because I'm trying to go with the direction of the market. So a lot of the orders here get diminished into, say, I'm just giving figures here, but say we have 1,000 orders. Now, what happens to this level? Is that a demand level? I would argue that it was a demand level. Okay? Supply and demand on a price chart is levels, right? But underlying those levels are orders, because to truly define supply or demand, it's not the levels, guys. It's the orders sitting at the levels. So it's not enough to know that we have a level here. We need to understand the imbalance now I've done that different, but now and then. So when we return to it, here's what's typically going to happen. But I'm just going to drop it down there, right? So let's say we come back, and let's say that there are still, 1,000 orders sitting back there. Something like that, absolutely. Okay, maybe we come down, find a little demand pocket here, get a little bounce up, right? Do something like that. Okay. Makes sense, right? Something like that. So you have these 1,000 buyers sitting there, and they're waiting to get filled. Now, a couple of things here will happen. Some of these buyers will prematurely get in. So for video purposes, let's do this a little bit closer so you guys understand what I'm saying. What I'm trying to say here is if there's 1,000 orders here, they'll see price dropping to the area, and some of them will jump up there and prematurely get into that. All right? That's it's very unfortunate for not only them, but for us. You know, sometimes that will work out for them, but it's most unfortunate for us because we were mitigating our risk properly, not chasing a trade, but yet they kind of ruined it for us, right? So they ruined it for us, meaning that we know that they're diminishing the orders, therefore we will cancel our orders, just like a lot of the other people are doing. But let's look at a different scenario. Who's buying there, you ask? Is anyone crazy enough to buy there? Absolutely. Tons of people, in fact, right? Because you still do need to take out that level, which means you have to chew through these. But what happens here is this becomes support. All right? This is a support level. A support level is going to do this. Right? They're going to do that. They are going to formulate new orders as we arrive to it. Why are they going to do that? Well, because they see this as just a big level, and they probably anticipate that it's always going to turn at support or resistance. Are they are they always wrong? No, absolutely not. Sometimes it does, right? Support and resistance holds a lot of validity in the market for sure. But is that the picture that we're looking for? No, absolutely not. And I'll show you why multiple times. I can't tell you the amount of times that this will get violated, right? Here's the probability. We're going to do this. Don't think for a second that we are not going to pause, right? We will, because we have 4,000 orders sitting there. So we're going to rally, right? Probably not. Why, you ask? Because what you're forgetting is that this is now what's relevant. Okay? So the downside is what's relevant. So any supply levels, let me grab my rectangle. Any supply levels in through this down move here, as we retrace back up, we'll find some supply levels in there on the smaller time frames. Okay? But those supply levels, what just happened? All right. Well, let's try that again, shall we? Maybe we should put it appropriately. There we go. So now we have 10,000 sellers in a supply level right on top of the area where support traders are placing their entries long. Okay. So who do you think should prevail here? Probably the sellers, right? Probably the sellers, absolutely. But in order to do that, there's an impossibility of going through that level until we fill every single order that exists there. It's not possible to go through it until we do that. So what we'll do is form this small consolidating area, and then boom, you're going to get massive momentum. All right? That momentum is caused by the imbalance. And here it is, guys. Also, at the same time, when those buyers get stopped out, what happens? What happens to a buy order when it gets stopped out? Share that with me, guys. They become sell orders. Good job. Absolutely. That's exactly right, guys. So now, not only do you have, these sellers, okay, which of course, become the smaller number, right? But they are consistently moving with the market. And when you have 10,000 sellers chewing through 4,000 sellers, you obviously have about 6,000. Again, I'm just throwing out numbers, trying to help you understand the simplicity and the equations. But you have about 6,000 remaining sell orders left, and these orders right here. So we're going to do this. 6,000 plus those 4,000, what happens? You end up with 10,000 sellers again. Okay? It's a simple equation. And the 10,000 sellers, boom, they create the momentum. Let's go look at this on a price chart. Any questions before I erase this? Let's see. Let me just kind of read through over here. Pertaining to, I see some great questions. Jim, thank you for sharing that. I want to see some other people. If you have some trading opportunities that you may be looking at, please feel free to share them with the group. Or if you have some analysis, anything you want to share, guys. Anything you want to share at all, it's most appreciated. Okay, so let's see. Right, Tom, exactly. And that's why you get momentum. You're exactly right. Because when that is reversed, when those buy orders become sell orders, they're fueling the fire. Right, exactly like Jim said, it fuels selling. It fuels it. That's right. It's like throwing a match on a fire, right? I mean, or gas. If you throw gas on a fire, what's going to happen to the fire? It's going to get bigger. Let's get rid of this drawing tools. These drawing tools. Yeah, I'm pretty sure about that. Let's go ahead and do that. Thanks for the confirmation. Okay, so let's take that and let's start to put it, into action, right? Okay. So here's a good correction right here. This is the first one that's coming to my eye here. Okay. So we're moving up. Okay. We have the uptrend, right? Until it isn't. Right? Until it isn't. Which happens right in through this area right there. So what immediately happens right there? Let's open up the price chart. And what happens right there? Who's in control of the markets now, right? Well, there's a couple of ways to look at it. One is that we literally just take out the level. Two is that we change structure, the dynamics based on the overall trend direction, which you saw that we just did. So who's in control of the markets? The sellers. Now, we would never trade something like this, right? But I'm just pointing out that even the resistance here pushes price lower and acts as supply. Okay. What happens here? We drop down and rally. Well, man, I don't understand that, right? Because, here's lower lows and lower highs, but yet we just rally like crazy. Let's look at this picture right here. Now, again, I just picked a random area, right? So we're going to look at this area. Here's what I'm going to do. I'm going to go up to the weekly chart, perhaps the monthly. I don't think I'll need to. I'm going to go up to the weekly chart. What do you guys think I'm going to see here? Good morning, Louise. A baby pullback? Yeah. That would make sense, right? Because in the context, think about how many bars are in the week. There's only 5 trading days, right? So if you go 1, 2, 3, 4, 5, and then 1, 2, 3, 4, 5, you're only going to end up with 10, 15 candles at max, right? I mean, I don't know. I'm not going to sit here and count all these candles, but let's go take a look. All right, up to the weekly chart we go. Now, look at what we see. Now, again, I'm doing this randomly, but it's always the same. My gold trade, same. It's always the same. And the more used to that you can get, the more just literal basics that you can stick in your trading, I think the better you'll do. Okay. Now, again, here we go. This on the daily chart showed us what? It showed us lower lows and lower highs. What's it showing us here? Higher highs, higher lows. Okay, so this was nothing more than a pullback to demand in that most relevant information. What's relevant, Will? The direction on the corresponding time frame. Okay, we really want to focus in on that. So if the weekly chart is telling me that we're moving up, let me give you an example. Most recent demand, okay, 2358.50s, 2317.75, exact numbers. These are not subjective numbers, okay? These are not guessed numbers. These are exact numbers, always printed in advance, right? So we know well before we come back to it, right? So that being said, what happened here? What's the most relevant information right now? Weekly chart, uptrend. Okay? How am I going to know that that's over? One of two ways. Supply exceeds demand, new direction. But one of those has to happen. Okay? In order for us to actually even consider selling this market, there is no way for us to call a top. It's not going to happen. There's no way. I can't do it. I'm literally, there's no way I could do that, guys. I'm definitely, there's just no way. Okay. Now, some people can. I think there's a lot of luck involved. All right. I would tell you that the only way that I believe that this could be achieved would be probably based on Fibonacci ratios. Why? Because there's no data up here. This is an all-time high we're forming. There is no data. So the only thing and again, this is, please understand, guys, this is just an opinion, and that's it. So please don't take it as anything other than that. But in my opinion, I believe that one could predetermine where the markets are most likely to reverse based on two things. One, structure high to structure low. Puts us up at 2507 for a 224 extension, right? So you can use these fib numbers. There's also the 127, 1618. I love that 1618, guys. This is referred to as the golden ratio. Love it. Let's see what happens. Interesting. Right here. We touch it almost to the tick. That's where you get a decline away, right? We're going to look at this V top here, 224, 2618. This too should give us some reaction. Am I going to sell there? No. Why? Because I'm not a Fibonacci trader. Do I use Fibonacci analysis? Sure. Do I place my trades solely based on it? No. It's used for confluence measures. I believe that we will find resistance and maybe even form supply up here. What am I going to do? Nothing. How am I going to react when we get there? I'm not. What am I going to do when we get there? After we get there? Well, I'm going to start watching price to show me where the sellers become stronger than the buyers. What if they don't? Then I do nothing. And it continues going higher. And this is why I don't like to try to predict price. Okay? I don't like to do that because it's never really worked out all that well, right? So I believe that that's one way of doing it. Here's the other way. Okay. So if I take this, let's just remove that for a moment. I keep hitting the wrong button. Sorry about that. I'm going to go into my NinjaTrader drop-down menu here. This is, if you don't use NinjaTrader, guys, you can use any any platform is going to have these simple tools here. Obviously, it doesn't have our functionality, but that's okay. You can use the simple tools that we have, but for today, I'm going to stick in the drop-down menu here, right? And I'm looking for the draw tool, a trending channel. So typically you'll see two, diagonal lines like that if you want to grab one. I can take this, put it on the major structure lows, on the major structure highs, right? And when I get outside of this range, either to the up or the downside, that in itself is an oscillator. Let's put on some indicators real quick. I'm never going to do this, by the way. I only do this, and what I mean is I don't actually do this for usable purposes, but I like to do it for, to just show you guys how the indicators do function, how we can read that without them. Let's throw on a stochastics, right? What do you guys think we're going to see up here? Maybe even starting to see divergence, right? Seeing overbought, okay? So as we push up above our trending channel, that's typically what you're going to find on your oscillating indicators as well. All right, interesting. Not only did we see one of the things that I said, we actually see both. Divergence. Overbought. Okay? So there's two things telling you that this market should get a reversal in the near future. Weekly chart. Okay, weekly chart. One of these candles represents an entire week. So it could take a little while for this to occur, right? Okay, but it's easy to see here, and you don't have to think about it in a matter of minutes. You got days and weeks before you have to actually do anything here. So we could do plenty of analysis, absolutely, and not have anything to worry about. Okay, so I want to bring that back to your guys' attention. Let's just throw some numbers on there. Again, let's get rid of that. I just wanted to show you guys how you can understand what the indicators should be showing even without looking at them. But here's what I want to do. Okay, I want to get in some of those numbers, right? And I want to just go ahead and maybe plot this down on my chart. Great thing about our tools here, I don't have to plot anything. I can just literally do it. Well, that's a lot on your chart, Will. Absolutely it is. I agree. So let's do this. Well, we actually need one of them, don't we? Oh, yeah, I gotta flip that. Oh, that's zone 6. Sorry, that's 5. Zone 6, just so you know, was way up here. Okay? So now we've cleaned up our chart. I don't have to do anything but sit here and wait and retrieve that area. When we get there, as I mentioned before, what am I going to do? I'm going to do nothing. Okay? However, I am going to start looking for supply exceeding demand. Okay? All right, guys. So market structure, very, very important. Let's look at some levels. Because a lot of people want to know about the levels, and guys, and this is probably one of the top questions I get all the time. How do you define your levels? Well, I got this great tool. I got this great tool that actually does it for me. But all joking aside, we take that tool off. Can this be done without it? Oh, absolutely. Manually, and I still do it manually sometimes, right? I mean, this absolutely. But I just want to focus on the tool today, and I'll be happy to answer any questions regarding it. Why? Because we're trying to reduce our subjectivity to the utmost as much as possible, guys. Please understand that unless it's fully automated, you can't reduce all of your subjectivity, and I don't really think you need to remove intuition from the market. But that being said, we do want to approach it in as much of a methodical way as we can. So how do we do that? Let's read market structure. Weekly chart says I'm going up. What should I be looking for on the weekly chart? Up, right? I should be looking to go up. Now, how do I get to a point where I can buy, though? Because if I'm rallying, can I buy new structure highs? You can if you want to, but absolutely not. Okay, so how do I approach an uptrending market? If I know that I want to be the buyer on the corresponding time frame, I want to buy into the weekly areas. So in that case, I have to not buy after the move up. I actually have to buy after the move down. That's ironic, isn't it? Okay, but remember what's right here. Until this is completely taken out, this is exactly the picture that we want to see. Okay, it's not always going to be perfect. You may not get it to the tick. It's not going to always touch your trend line. It may penetrate a little bit through it. It may not quite get to it. I would say more commonly it doesn't really get to it. Okay, and that just happens. It's not going to be perfect. But guess what? We're not trying to be perfect. We actually have a pretty big range here that makes total sense. Okay? So let's go through what we've learned thus far. What's important about this level? The buyers exceeded the sellers out of it, right? We rallied away from it. So what's going to happen if we come back to it? Well, the buyers should be willing to participate again. Why? Because our direction is still up, and I have never seen, not even a little bit, any indication that the sellers exceed the buyers. Okay? When am I going to see that? When price does this. And I love it, guys, because this is how simple it can be. When price comes down, remember that 10,000 order scenario? Remember that they've already canceled a lot of orders. All right? You see this up here, new structure forming, new structure highs made. When that occurs, a lot of the people from this, or whether it be algos, people, I don't really know, guys. I really am not that in tune with how it gets placed. As far as who's placing it, I would venture to say that it's the institutions or hedge funds, maybe things like that. But at the end of the day, it really doesn't matter to me, right? It could be algorithms doing it, sure. But I think the algorithms are teaching you, excuse me, they're not teaching you anything. They're taking your money, right? But the algorithms typically are going to follow, again, what is very relevant. So I don't think it's the algorithms other than the institutional algorithms, of course. In other words, high frequency trading and all of that, that's just on a microscopic level. So I don't think you're going to find their orders down here. I think you'll find the institutions. Okay, but when we return to this area, 2358.50s, my anticipatory outcome is going to be that we do this. Why? Because the direction remains up. What's going to prove you wrong, Will? We're going to break it. Okay, so if I do something like this, understanding that they've already canceled a lot of the orders, then I know now that I could expect maybe a bounce here, but what I'm really looking for is not to buy. I'm looking to sell, right? And this is, again, this is where maybe it's a misconception, but this is what I'm trying to get to, guys. After these huge rallies like this, huge moves up, please bear in mind this is a weekly chart. We'll do this on the smaller time frame. But after these large moves up, we really want to be a high probability seller because of the altitude distance here is extreme. We're looking to go lower. Where do we want to go? I can tell you right here, right now, that I see the origin of a huge move up. I have a range here, and I can tell you definitively speaking that we will range within it. Absolutely, without a doubt, without a shadow of a doubt. When we break down, and eventually we will, when we do, this is going to become a substantial range. The buyers are going to want to find support down here. Is that what we're doing? No, I don't want to call that. That's not my job. I don't want to call the bottom here. What do I want to do? I want to be prepared when we get there for it if it's potentially going to become the bottom. Just like up here, I'm preparing myself now with a thought process that says be ready for the top to form when it's ready on its own. You can't do it, right? Not you guys, I'm talking about myself, but it's saying, Will, you certainly can't do it. So let it happen and let it show you. You don't have to be the first of the party, if okay? But we certainly want to be one of the first and the last to leave. Got to be that annoying person, right? You want to be the first of the party, the last to leave? Absolutely. All right, so that's where I'm trying to go with that. Right now, guys, I would be much more interested in being the seller here. But in order to do that, I need to break structure. I need to show that the sellers are stronger than the buyers. And then I'm going to use the origin of that entire rally up, and I'm going to put my Fibonacci ratios from that area, from structure low to structure high. Let's go turn some zones back on, okay? Just like that. So when we get down to this area, do you find it ironic that it lines up with a huge support level right here? Absolutely. There's no doubt about it. Demand previous to it. All right. But again, the closer we can get down here to the origin of that, even the better. But guys, I've got to tell you, one of the things that's beaten me up over the years is trying to call those tops and bottoms like that. Right? And what will happen is you'll be in an uptrend and you'll say, okay, well, if it breaks down here, I imagine it will probably still find, it will probably still find some buyers here. I agree, 110%. I definitely agree because this is a weekly chart, so on and so forth. But I can't tell you the amount of times I've seen those broken too. And I've gotten beat up just trying to define it when I know. And let me show you, this is, again, I'm trying to share what I believe is the most relevant. This is the most relevant. So by the time we get back down there, okay, we may do something like this and then just penetrate right through it. I've seen it happen so many times. So what I don't want to do is try to call things after I'm not with the context of the market. I just want to let that go. I want to let it show me the direction, and I want to adhere to it. I'm okay with that, right? Oh, wow, guys, look at that, by the way. Wow, that was very close, wasn't it? Come right back down to our entry point there. May get taken out on the trade. That's okay. It's not a problem. We had a very large risk to reward ratio there on profit target 1. If we rally back up, this is just a bonus here. So let's take a look now. You guys guide me here. Would you rather go over the gold trade first, or would you rather go out and take a look at some other markets that we're not actually doing anything in right now first? Either way, we can do both of them, but which one would you guys prefer to do first? Okay, Tom says gold. Okay. All right, Tom says gold. Patrick says gold. Luis, Alvin, you guys got outweighed there. Sorry, I'm gonna come back to those markets. Don't worry, guys. Okay, so gold, sure, absolutely. All right, absolutely. So I was buying into the gold market. So basically, what I was doing here is looking at the larger time frame, right? So I was looking at the 4-hour chart, just so you guys know. Okay, now. If we turn, let's just for a second, let's turn everything off. Let's simplify, yes? Let's go up to the 4-hour chart, in fact. Let's read that market. Okay, let's take it down first, or I should say up, but let's go look here. Okay, let's go look here. What's happening on the gold market? To be quite frank with you guys, it's a huge range, right? This thing's all kinds of crazy. Why? Well, because look, we violated structure highs, we violated structure lows. Okay, so right now we are trading in a range. Okay, but what is here's important. What is the most relevant? What's the most relevant right now? Remember, guys, this is a daily chart. Okay, this is a daily chart. That means that it's for a day or even getting into swing trading. This is a large time frame. It really is. So it takes a very long time for things to work out. Let me show you what initiated my position here. All right, and I'm going to keep this as simple as I've taught you the market structure today. Here's what I saw. Down move. Right? Is that what's most relevant? Well, it was. It absolutely was. But when, oh when, did the buyers exceed the sellers? Okay? So I thought I turned this off. Oh, no, that was on my other. Okay, yeah. So right now I'm just reading market structure. Okay? And what I wanted to do is focus in on this right here. All right, I wanted to focus in on this area right here. Why? Because it took out the sellers. Okay, unfilled orders up into that big blue candle there. Not going to touch too much on that today. That's a whole different lesson there. But that being said, were we at the top or the origin of where the sellers could exist, or were we near the bottom? Okay, remember, look over here, structure. Okay, you see this back here? What did I tell you guys I would do? Did I buy? Okay, was I looking to buy in this area? No. But I wanted to see price tell me to. Okay, this is after a large move down. Attempt at the level already. So let's grab this whole thing in. Look at what's already happened. I know there's significant buyers here, but for one thing, this is too large for me to place orders in. It's just a very large area. I'm not willing to take the daily risks. Okay. But what happens when price comes down here? Sure, we turn within the area. And if I would have placed an order there, would I have made even more money? Yeah, well, yes, but what if I would have been wrong? Right? And I've seen that happen equal amounts of times. Right? Trying to call these tops and bottoms like that, for me, it's a no-no. Can we do it? Absolutely. But I would prefer not to. Okay? I think the members would probably agree with that. Calling these areas, it just does. I would rather be with the relevant information. Okay? So nonetheless, It doesn't change the fact, okay? Let's do it like this so it'll be easy for you guys to see. Region Y there. What, I didn't say reason, by the way, I said region. So if you're in NinjaTrader, you can use this tool by selecting the region, highlight Y axis. Okay, Y is going to be your horizontal axis, X will be your vertical. All right. So yes, excuse me, yeah, we're turning there, right? Okay, great. Well, that's good, you know, and I look at it and I say, okay, well, that's, you know, all great and well. But we have supply right on top of it. So that in itself tells me that there's a high probability that we will go through it. Well, we didn't. And so in that case, it has proven to me that it is a viable level still. Had it not have done that, and I can tell you guys, I would say 50% of the time or greater, when you form consolidation just before, you will go through it. Okay? There's without a shadow of a doubt. Almost always you'll go, well, I say even or greater, like I said, or greater than 50%, you will almost always go through it. In this case, you didn't. So that does become more significant to me. And I'm still not interested in buying. Just because I see price turning here, that is not going to initiate buy positions. What will, however, is when I form new relevant demand. This is now relevant. Okay? This becomes relevant. What's happening as we speak? We're forming new demand, even as we speak. Even as we speak. Guys, I want you to anticipate this to the right side of your chart. Remember this picture. Okay? We are anticipating future demand may not happen. Okay, that's fine. What if it doesn't break that structure high? No demand is formed, right? What I'm looking for is continuation. Continuation breaks previous structure. What is more relevant to me right now? Right? Is it the upturn or the down? Well, right now it's the upturn because this is a daily chart, okay, trading smaller time frames. So right now I'm more interested in the absolute relevancy, and at this particular time it appears that it is up. I can tell you this right now. I want you to pay attention to this, guys. I'm going to give an if then else thought process, okay? Here's what we're going to look at. We're going to say if this structure, let's get rid of this. We're going to say if this structure high is violated, then we expect to take out this structure high here. Okay? This will be the second area, but where I would expect to see price actually stop or halt would be right here and above. Okay? Right back into this real supply area. This is where the real orders exist back here, by the way, guys. Okay? This is the reason that we turned here. You see this? This is a supply level right here. Original supply, we drop, return, continuation to the downside. Makes sense. How do I know that those orders are still not there? I don't know that at all. In fact, they can be. In fact, they probably are. There's a lot of them still there. But we now know that 10,000, 5,000, 1,000 equation, right? This is not as relevant as the up move now. If we break structure high of the 44s, then I expect to see the 55s. Okay? Then I expect to find some sellers give me a pullback to demand. So if I break this structure, I expect to see this one. Don't know what happens above that. But what I would anticipate is this. All right? Just like that. So we're forming our relevant thought process in real time, and we're anticipating the right side of the chart based on what we see in real time as it is occurring. It's a weekly chart, excuse me, a daily chart. What happens on the 5-minute chart? How different is it, Will? It's not any different. It's the same thing. Let's go take a look. Okay, I think it was, let's go take a look at, let me see right here, weekly chart. Let me take this back down to the daily. Okay. Now let's go down here to the NASDAQ. Told you I'd cover this situation as well. All right. Now on the NASDAQ, bring something to you guys' attention here. Notice how the market's selling off right here. Okay, we want to take note of that. Let's see what's happening. Will, let's sell this market. Oh no. Oh no. Why, Will? Because supply is forming. I agree. And I'm telling you right now, I would love to be the seller. But until demand is broken, which is in control to the upside, I have no reason to believe that we're not about to rally as we are coming into demand. Okay, this is support. Let's remove it. So if we come back down, you see this demand back here? I need to see what happens there. I need to see that. We have relevant supply, I can tell you for me, but not on this time frame. I'm not pointing that out just yet, but right in through here, we absolutely have supply. So we'll focus in on that. Okay, and let me find yesterday. I'm going to walk you guys through a scenario. In fact, you can go review the video if you like. Okay, give me just 1 second. And let's see here. Hang tight for just a second, guys. And what I'll do here is there you go. There's a video I want you to take a look at. I hope you like it. But I'm going to walk you through it. We had yesterday an extreme rally in price, right? So on the 30-minute chart, remember that uptrend that we were seeing, right? We saw nothing but an uptrend and so on and so forth. I was watching price because a lot of times we can do this for short term, okay? So I was watching price yesterday. I was watching structure. I knew that price had been rallying all day long. Eventually, that has to break. Not always, but eventually. It's in the chat, Tom. Just look to the left of your screen there and you'll find it. Hopefully you see that there. Okay, but what I saw is a huge rally up. And again, guys, I was never interested in doing anything but buying. In fact, that's what I was doing yesterday. Okay, SD Model's doing it as well. I'll talk about that in just a moment. I'm actually going to get to that pretty soon. But we have the demand levels along the way up. Okay, so if we see this, that was absolutely the first demand level at the beginning of the departure. Okay, look at this. This is what I've continued to talk about. Remember this decline? That's a pullback. On the 30-minute chart, what do you think that looks like? Right? It's just a pullback to go higher. So when we prove that we can do that, i.e., when we take out supply in through here, then we know that the buyers are now in control. And that initiated this level there, right? Analysis purposes. I didn't get to execute that trade, by the way. Okay? The members can tell you about that. I think they saw as we were coming in. Excuse me. So on the rally up, I watched it all day long. And I said to myself, no way I'm doing anything in this market other than buy until I'm proven otherwise. What happens? We come up. Demand structure here. We had a nice entry off that there. Puts you up into supply. Okay? From that point forward, excuse me, let me backtrack for just a moment. Just so you guys know, I didn't mean to say I actually executed an entry. Okay? I was simply watching price. All right? So I just wanted to be transparent there with that. I didn't actually buy here. Okay? Would I have made money? Sure, but I didn't. So just telling you guys. That being said, I wasn't interested in that. I was interested in selling. Why? Because we'd had a huge move up for the day. Now, why wasn't I looking at supply levels back here? Well, because they didn't exist. All right? They didn't even exist. So what I had to do was wait for something to definitively tell me that the sellers are stronger than the buyers. Okay? What was that? I wanted to see the buyers get taken out, right? Well, why not this level, Will? Why didn't you initiate it as soon as that level got taken out? Simple answer. Because that never became an active area. We never took out structure highs. We never formed new structure highs, i.e. this is not a demand level. This is a support level, in which case I would expect for it to be filled and traded through. How are we going to do that? We're going to form new sell orders. Okay. Let's do that. All right. Specifically, right in this area right here. So in order to chew through this, we have to form new sell orders. But again, that didn't really do it for me. When we took out that demand, however, and how many times, guys, I told you just a moment ago, almost always, when you see this picture before your level, you will almost always go through it. Okay? So when we did go through it, then I knew that the sellers here were stronger than the buyers. And that in the video is what you'll see as the picture there. Okay, depicted in the video, you'll see that. Okay. All right. Turning from demand. Makes a lot of sense, doesn't it? Will, you got supply right above. Do I? Do I really have supply above? How do I know? Just because a zone got plotted on the chart? You cannot. You can actually. I'm going to show you that with the SE model, but it's not encouraged to look at every single zone that forms. Okay? We have to understand the equation. We have to also understand that I just reverted right back into exactly what I said just moments ago. Remember when I said, how do we know we're not going to just find the buyers and rally right here? So what did we talk about? This demand level, right? What's happened since we said that? Rally back up. Now I'm going to tell you right now you're going to find resistance. Okay, right in this structure here. Likely to find supply. Probability is you'll find a supply level right in this area on the smaller time frame. Okay, so up to the top of that, to the origin of the drop. Let's open up the chart, see what we see. Let's read this candle. Shooting star. Does it mean much to me? No. I really don't care about the patterns in themselves, guys, but what I do like is the picture there. It just so happens to be, a shooting star, and that's what the conventional way of verbiage, if you will, that's what that's called. It's basically when you have a small body followed by a very large upside wick. The same is true to the downside. This, however, is a little bit large on the body here, but let's just say it. So it would be to the downside, you'd have a large tail, right? And I love to see that because that's an indication that, yeah, absolutely, there's supply up here, no doubt about it, right? Just like right now, you see this large tail, that's significant. It means that there is large demand. Guess what? What do you see in this level? Multiple large tails, right? Just like that. Okay, so what we're doing is we're rounding back up. Let's look at these candles. Let's analyze this. Should I come back up here? You shouldn't. If the sellers are really that strong, you shouldn't really get back up that far. Why? Well, because there's significant supply that's formed along the way down as well. Okay, now there was demand out of this level. As you can see, a large tail, very, very significant. You can see how well the zones work. If you're a scalper, we're going to look at doing that in just a moment. Show you what the SD model is doing, scalping the market. Right? For demonstration purposes only. I'm trying to show you, especially when it comes to the SD model, guys, I'm trying to show you how effective the zones can be. Okay, the reason I'm doing that is because the SD model is simply trading every zone with the exception of, there's reasons that it doesn't trade certain zones, but not because, for example, if a zone is active, it's not going to go down. There's a safety measure in it that says if I trade through these levels, don't execute a new position, right? So that would be one of the only reasons that it's a safety measure that we've put in so that if you're having a crash, it won't keep executing positions against you, right? Safety measure. Smaller time frame. Let's go to the smaller time frame and see if we have substantial supply. Now I can see it on this chart right here. How can I see that? Because I want to see the origin of a drop. Let's read the candle. Price opens, trades up, lo and behold, to find where that supply was. Where's the supply now? Let's look at our volume profile. It's going to tell you, okay? Right in through this area right here, okay? Significant supply was all the way down here until it wasn't, right? Now it's trying to show you where the unfilled orders are, right up into structures, 5936. Am I interested in that? Well, no, we've already traded up through 60, 70, actually, of the candle. It looks like 70% at least, right? Okay. I'm going to get into the tool here in just a moment as well. Try to move a little bit faster. The point is, I'm trying to locate the origin of the downside. Okay. If I read the candle, we open here. These are blue candles representing a down or negative close. From the open to the close must be lower than the open. The high and low, they are irrelevant. Okay, the body of the color is determined by whether the body close is higher or lower than the open. I'm sure most of you already knew that. So that being said, what I can see here is that we opened here. We traded up into supply and just immediately dropped down. But where did we go? To our demand level. Then we immediately dropped rallied all the way back up, found structure. And from that point right there, I double clicked. Okay, and from that point, I can see where the origin of a strong decline occurred. Okay, if I go to the smaller time frame, you're probably going to see that. Let's go to a 10-minute chart. There's my line. There's supply. Okay. So, you know, it's things like that, guys. It's not that difficult to see, but you have to be able to define it on a chart. You have to understand the picture. Is this a great high probability level? Actually, no. Why? Because the picture of the level, okay? I'm not even getting into this too much today because I've already gone into so much, but I will tell you this. This is a substantial pullback. My question to you and everyone who looks at this as a great level is this. If the significant supply was so strong, then why did we rally up from demand all the way through this, right? Why did we get so far back up here? What I would rather have seen is, well, let's go find you a picture. I think I just showed you. Yeah. What I would rather have seen is my picture. Tight consolidation. Okay, when you rally up or decline to these levels, see these are small pullbacks here. We want to be tightly consolidated. All right. So anyway, I just want to point that out. But is this going to be resistance and act as supply? Sure, absolutely. All right. Okay. Do I want to, guys? Here we go. Let's go up to the 4-hour chart. Do I want to partake in that smaller time frame stuff? No, I would rather have been the buyer, right? Remember, we're looking at the larger time frame. We can use 3 time frames. The daily, let's look at it. What's the daily telling me? Daily's telling me the most relevant information is up. Okay, got it. Well, let me give you some more information. It's telling me the most relevant information is up, right? Probably hope I did that. Wait. And, okay, got those on. All right, so it's going to be a fresh level then. All right, I'm going to define this manually for you. I told you from time to time I'll do this. So in this case, we're going to pull back. Where's my most relevant information? So I want to be the buyer, okay, down into this area here. All right, that's going to be very relevant. When we revisit that 5860, 5800, okay, and just below, that's going to be. Let's look at that a different way. Let's grab the power zone. Okay, do you find it ironic, this area right here? What have I told you? It's about the unfilled, right? So I can specify that location right there. just below the 5800s, let's call it the 5830s. Okay, absolutely. I'll look to that area as a pull back. Now remember, what I'm going to see on this chart, it's still going to be in the context of an uptrend, even if we do this. Okay? The only way to prove me otherwise is to show me supply and break down through that. Then my expectation is it will go back down here close to the origin. But until we do that, I have no other reason except to look for buying opportunities. Okay, larger time frame. Let's go to the smaller time frame here. Looks like we may get that second target on gold. Keep an eye on that. Sorry for the incoming there. The phones can get a little bit loud. Okay. Yeah, but so having said that, guys, okay, I want to be very patient, very methodical about this. All right? I don't want to be selling just because I have a feeling. I want to use that intuition, but I want to do it methodically. I want to look at my larger time frames. I want to get a perspective on the market. Here's what changes the traders, that in my experience. And I want you guys to understand, I hope that this helps, right? But at the end of the day, all I can do is demonstrate and share my experience. I will help any of you in any way that I possibly can. I want to build a community that always helps, right? But at the end of the day, we have to be able to achieve this on our own. All right? And there's no other way to say it other than just to say it bluntly. But notice what's happening right here. Okay? Open area. Looks pretty good. All right, we'll talk about the volume in just a moment. So we're declining down to an area in which the buyers previously existed. We're also coming back to the support of the trend line. So do I really want to be selling right now, or do I want to wait for it to show me, really show me that it is time? I would prefer that we really wait and let it show me. Okay, go down to a smaller time frame. So 4-hour chart, daily chart, uptrend. 60-minute chart, uptrend. Coming back to find demand, right? So again, guys, I'm very methodical here. I'm going to wait this out. I prefer the larger time frames myself. Is this applicable to a 1-minute chart? It's exactly the same. You're going to find that on a 1-minute chart, though, there's so many levels. Okay, yesterday I took that on the 10-minute chart. I prefer, that's, as the members will confirm, if you guys will in the chat. I don't ever say anything that I don't in the room. But I think they'll confirm for you that I don't prefer to go lower than the 10-minute chart. In fact, I prefer the 60-minute or the 30-minute chart for execution, but I will go, if I'm going to look for really short-term stuff, I will indeed go to the 10-minute chart. Okay, I have no quandaries about doing that. Okay, but look at what we're doing continuously. I have no reason to believe that we are going to do this, and I have every reason to wait and see if it does. I'm not trying to predict this, guys. I'm not trying to say that there's no way that we're going to break down here. That is definitely not what I'm saying. What I am strongly suggesting here is that when we do decline down here, there is absolutely, without a doubt, no way that we're going through this level without forming supply. Not going to happen. Okay? Supply has to exceed the buyers in order for us to go through it. There's just no other way around it. So if you watch on the small time frame, for all intensive purposes, okay? Again, large pullback there. Not in love with that. It's a continuation move, not a real reversal or reversion supply level. Okay, but you see how the supply is literally formed? See that right there? We just formed it. Again, large wick, so on and so forth. Okay. But I'm more interested in waiting now. Right? Okay. So I think it might be time to address some questions. We've looked a lot at market structure today, guys. We've talked about the zones. How do we use the zones? Exactly as you see them. Same thing. There's no difference, right? You see what we do, how we do it, Okay, everything. Look at what's happened on gold. Let's review what I have said thus far. Breaking structure. Demand, right? You're literally forming demand as we speak. Now, how can we be the people who do that? Because I can guarantee you this. You're going to look back and you're going to say, man, why couldn't I have just been the one who created that large decline? Don't think that anymore. We want to help you try to be that. Can we, guys, look, in a humble way here, I'm just trying to tell you that I'm not always right. No one is always right. But what I can do is try my best. Okay, that's all any of us can do. So I'm not trying to say this is a holy grail. It's the furthest thing from that, guys. This requires such hard work and due diligence. It is very, very difficult, but it can be achieved. Okay? So what I want to look over here now is I don't want to look back. I don't want to play the shoulda, woulda, coulda game. I don't want to do that. And then look back, you know, and maybe we even do this. Who knows? But I don't want to look back and see that and say, I wish I would have been able to take part in that. Okay? I want to know about that stuff in advance. I want to see the most relevant information. I want to therefore take part in that relevancy. Okay? I can define new structure. Continuation moves to the upside. Right? I should, in theory, find support and hopefully get up to this area above. Do I know that's going to happen? No. Does it affect my trade? Nope. Why? Because I'm already out of that position. I didn't want to argue with this area up here. For one, I didn't take it on a daily chart, right? I took it on a smaller time frame. So for that reason, I don't want to argue with that when it's already produced a massive move to the upside. There's supply right here. Unfilled orders, absolutely. Are we going to find them and turn there? Don't know. But what I would rather see is the move continuing to the upside. When I'm proved otherwise, then I'll take a different perspective on the market. Okay? Does everyone see how this demand is continuing to hold? Why? Support, demand. All right. Okay, question and answer time. Boy, oh boy, guys, I hope I've done well for you. I certainly hope that it's been advantageous. I don't ever want to waste anyone's time. I really don't. I'm happy to answer any questions that you have. If you want to be a part of the program, I'm not going to throw you a sales pitch here, guys. Don't worry. But if you want to be a part of the program, we would love to have you. Okay, absolutely, I would. But I'm not going to come in here and do a massive sales pitch because that's not what today was about. Today was about coming in here trying to see if I could help people get a grasp on market structure, you know, and so on and so forth. So hopefully I did. Let's get some questions and answers. And also, I will stick around a little bit longer because I'm going to take a look at the zones as well. And I will answer any questions you guys have in regards to that. So let me fight through the questions, the chat. All right. Dave, I see your question in the Q&A. Yes, we are working diligently on that as we speak. Just so you guys know, NinjaTrader, as amazing as they are, they've restructured their order submissions. So, Dave, we are currently working on that. We've already updated it to their new form of. It's basically the way that they handle their variables. So we have already updated that. We're in the middle of testing it. There's going to be some items that we want to test a little bit further and get the kinks ironed out. But I'm confident that the new order submission is going to be much better. Absolutely. Yeah. So I'll keep you updated on that. All right. First, let me go through the Q&A here just to make sure. Chris, you had an earlier question. What's a good stop placement, he says. I've seen price on several occasions go 1 to 4 ticks beyond on the S&P. Absolutely. The distal line. Can you define the distal line for me, Chris? I mean, I would imagine that's the furthest line, right? But exactly what is the distal for me? I don't really use that terminology. Okay, it's the furthest line. Yeah. Okay, that's what I imagine. So he's saying I've seen price on several occasions go 1 to 4 ticks beyond the distal line, supply demand zone, and completely reverse in the trade workout. Absolutely, Chris. Absolutely. Okay? So it's all about those unfilled orders, right? The orders that have already, remember what I told you before? What were we looking at where I said it wasn't really a massive quality level? I think it was actually the NASDAQ maybe. But I mean, let's take all of this off, right? So from time to time, what we will see, and this comes in, let's just look at right now. This is a good example. Let's look right here. Let's turn off the zones for a moment. Actually, I need to, there we go. Okay, let's turn them off for a moment, clean up the chart. A lot of times people are going to look at, they'll look at pivot structures. I can't really tell you what all people look at, right? But at the end of the day, what I've seen happen a lot of times is that exactly like you said, we will penetrate ever so slightly through the level and then revert. So what I want you to do is start to take that level, all right? I want you to take that level, look left. See if that level turned within a previous level. What you're going to find is 9 times out of 10, when it does, it is not going to be the origin of a move. Okay? It's going to be a continuation in the midst of a move. Okay? So I want to use that information to my benefit. You see this right here? Okay? So technically, we're still within that demand level. Okay? As well. So a lot of times what you want to do is just look left. I think there's clues back there. Okay? A lot of times you'll find clues. Now let me tell you something else. This is going to help you a lot, Chris. Remember this. Remember, we want to see price pull back far enough to have a high probability scenario. Let me tell you this right now. I'm going to point something out to you guys right now. Okay? This area down here, we want to pay attention to it, right? Do I want to go ahead and place a trade there right now? No. Why? Please, anyone tell me why. Why would I not want to do that right now? Because a lot of people would look at that and say, that's a massive demand level. I'm going to place a buy limit order there right now. Why don't I want to do that? Luis says because we're in an uptrend. Right, we are in an uptrend, but what if we get back to that level? Right. There you go. Felix typing in the Q&A here. By the time it gets there, it's the opposite direction. What becomes more relevant? Okay, probability then is that, remember this picture for the rest of the day, guys. Watch this. Remember this picture. We have demand, right? So remember this. If we chew through that demand without a shadow of a doubt, there's going to be larger picture supply here. That's the only way to get down here. Okay, so what then becomes really relevant for the rest of the day is the supply that did that. Okay, and again, if it forms down here, let me tell you, if the supply forms anywhere near this level, within a distance of, I'd say 2 to 1 the distance there up, forget about it. Probability is we're going to do that. Because yet again, we're forming new supply in the context of what is most relevant anyway. How would I do that, you might ask? Well, okay, I'm not saying that it won't turn there. This is a very strong level for sure, albeit turning from a previous level, but it is a strong area. So let's say we get down there. How do I approach that? Simple. I methodically wait. Okay, what am I going to see? Demand. I'm going to see new demand form, okay, down into my area. I'm going to see new demand form, okay, reverting into that supply as we speak, right? See how I told you there was supply forming along the way down, okay? A lot of volume, a lot of volume. See how the sell volume here was already predominantly filled? The average sell volume contains 1,778 to the sell side. However, this particular level filled 5,251. Just the sell side was more than the average total. Okay, that makes sense? A lot of volume. A lot of volume there. Let's get to some questions. All right, I think, let's see. Patrick's got a fib question. I don't see the actual question you said, but it can wait. Go ahead, my man. Go ahead, Patrick. Feel free. Put that puppy in there and we'll get it answered. Now, I'm going to try to get you out of here pretty quick after these questions, guys. I know we've been here about 2 hours. Okay, it's a long time for my voice is going out. Need some liquids. But I do want to talk about the software as well. I want to get these questions answered, and I want to answer any questions you may have. Okay. All right, for now, I'll go back to the chat over here. What time do you start trading in the morning? There's not an exact science to that, I don't think. I'd say whatever time I get in the office, right? But no, all joking aside, typically I would say from about 7:30 or 8 Eastern Standard Time. Yeah, so pretty much between 7:30 and 8 Eastern Standard Time. Okay. Let me real quick as we're watching this, guys. Please understand what I'm saying here. This level right here, will it surprise you if we break through it to the upside? Okay, will that surprise you? Let me remind you. See what I'm saying? Okay, be mindful, guys. Get the bird's eye view. Be cautious, but understand structure. Okay, understand structure. This is significant demand right there, just so you guys know. Huge tail. We're going to have a very difficult time. We're going to range a bit today, I imagine. Okay, let me continue. Sorry about that. Get on my tangents, don't I? All right. Jim said, contrary to subjective analysis with the EW, if one applies the waves movements and pivots as attempts to get unfilled orders, it makes the EW easier to follow. Gold may retrace to a pocket of 430. Okay, thank you for sharing that. Yeah, and I would concur. Absolutely. Okay. Jim, thank you for that. As you've outlined previously, says they'll they will pull their bits to drop price to get those new orders. Exactly, Jim. You and I have had some very detailed conversations about this, haven't we? Absolutely. Jim's done a great job, by the way, guys. Jim's one of the many. All these names in the room, by the way, that you're seeing, these guys are rock stars, in my opinion, because they are hard workers. They put in so much time. I love it. Thank you for that. And you're absolutely right, Jim. I concur, and I love what you're doing. I know you found a way to define, some levels. It's great. I love it. Okay. Luis, you just logged in. No worries. Oh, thank you. Yeah, it is being recorded, Luis. Thank you for that question there. Okay, let's see if I can find any more questions. Will, would you say that there could still be quite of unfilled orders from higher time frame traders, institutions at the origin of the move? Absolutely, Chris. Yeah, but more importantly, it's not more importantly actually. I mean, it's just yes. The reality of it is that they absolutely leave a lot of their orders there. But I think also the reality is that the true professionals, the people who know how to follow them, I think also they place a lot of new orders. And I'm just being realistic, guys. We talk about unfilled orders versus the filled orders and all of that. We talk about that tons. But in the reality of it, we look for the areas where the unfilled orders exist only because, it's not that we're expecting those to turn price by itself, right? Can it? Absolutely. I think the crash way back when was a testament to that, right? But yeah, no, at the end of the day, guys, look, it's like this. We can find the unfilled orders, but if we don't have new orders coming in with them, I still think you'll go through it. Because the probability is on the relevant side, you're forming new orders in the context of what's currently happening. So we want to get back to those areas, the origins of the moves, etc., where the imbalance was way out, and we're going to expect that again, absolutely, because a lot of times when the institutions do it, you're exactly right. They leave their orders there, and they are going to reverse that market again. But for us, we want to try not to call that maybe and let it start to show us, right? Absolutely. But yes, the answer to the question simplistically is yes, absolutely. To follow up on it would be, can we trade the institutional levels? You know what I'm saying? I mean, we trade all of the institutional levels that we can find, but can we place the orders like the institutions? I don't think so. I really don't. I firmly believe that regardless of what you're told, I don't believe that we can. However, I believe that when we go back and find the areas that they have already placed their orders, absolutely. That's where we can take part. Okay. Well, you guys have some awesome questions. Chris, earlier you were saying, can you elaborate on that consolidation comment, please? I'm sorry about that. I missed it. I'll try to come back to that. Let me move as fast as I can through here. Chris, are those trades automated? Yeah, the ones that you were looking at, the SD model, those ones are. Okay, they were, as you as you saw in real time, it was doing that. Yeah, I just wanted to do that for demonstrational purposes. Remember to show you how strong the zones are. Absolutely. No, Alvin. So, I mean, you can set, there's a different setting that I'll tell it how many trades to take per zone. Yeah. Yeah. Luis, thank you very much for the kind words. I'm glad you love the zones, my friend. Absolutely. David, thank you very, very much. I appreciate that. This is really great software. It's also great to get your analysis and how you see it. Thank you so much, David. I certainly appreciate that. It means a lot. Lot of analysis. Jim, thank you so much for pointing all of this out for everyone. I hope you guys have benefited from his activity in the room. Could you explain how the zones are created if possible? Yes and no. Obviously, I can't give out my algorithm. I'm not trying to hide it, guys. Please don't take it that way. I'm not trying to like hide it and say, oh, it's so proprietary that I'm never going to, I mean, but at the end of the day, I have spent a lot of money trying to do it and literally, 1,000 hours or more. So, but yeah, I can definitely go into it. Sure, absolutely. So what we're doing is we're looking at price formations, okay? We're looking at price formations. We're looking at extensive rallies or declines away. So all of that has to do with price recognition, and the zones are taking all of that into account. Okay, it factors in the distance. It factors in how long the zones took to form. It factors in all of that stuff. It also is derived from volume information, which is how we're able to get all of this underlying information here for you. Okay, so there's so many different points I think that goes into the formation of the zones that it makes it a little bit difficult to understand without literally going into the code of it. So, but yeah, we're focusing on primarily formations, volume information, volatility of the market. Okay, I'd say that'd be the primary components of what we're doing. Now outside of that, just so you know, where our zones really come into, I would say that where they really differentiate themselves from everyone else, trying to always stay ahead of the curve where no one can really keep up with our zones. And maybe they do, maybe they're better. I don't really know. I don't think so, but I'm biased, right? But that being said, we have extensive filtering technology, right? And I'm not trying to, I don't want to be, crazy with the terminology and trying to be a sales here. I'm literally saying that's what they call it, technology, when you formulate algorithms and so on and so forth. So, that's all that it is. But we filter the mess out of zones. A lot of filtering criteria points going on in there. Not only that, but what people don't know, and I'll be happy to share with you, is that the zones do adapt to different asset classes and different time frames. So what you see on the daily chart, the way that this zone was derived is going to be entirely different than the way that these zones were. Okay? I want you guys to understand that. Appreciate you asking. And I hope that I could share enough with you that it makes sense, right? Hopefully. Okay. And thank you guys so much for the kind comments coming in. Really appreciate it. Really, very much. Thanks, Chris. That was very nice of you to say. Let's see. Right, absolutely. Scott was pointing out earlier, see if it consolidates before the level. I love that. Man, that's so true. Patrick was saying if the market reverses, that's a pivot, a reaction to the origin. Very, very, very good and very clear, Patrick. Want to give a lot of credit to Patrick as well. Very hard worker. Patrick actually put in a lot of work in formulation of Excel spreadsheets with definitive rule set. In fact, he developed, based on our methodology, he developed an entire example trade plan that is in our course. Thank you, Patrick. Okay. Yeah, Chris, Tuesday through Thursday. Sure. Yeah, Tuesday through Thursday. Today you're in it, right? I mean, this is like this, you would be, I just opened it up. Yeah, I just opened it up to everyone today. Yeah, absolutely. And you're very welcome, David. Thank you. Could you look at the oil market, give an overview? Sure, absolutely. Let me run through the rest of the questions, and then I'll be happy to do that. As a member, do you help when needed on a personal basis? Okay, so this is a great question, and I want to tell you guys I'm just being very honest as I try to do, but absolutely. I would ask that you probably ask the other members, right? Let's see what they have to say. Probably best that it doesn't come from me. You know, am I helpful on a personal basis? I don't know. Let's ask the members, right? If you guys would be kind enough to share that. I'm not asking you to say yes or no. I'm asking you just to be honest, okay? I'd like to think so, yes. And will I take the time to review your charts, or will I take the time to answer your questions? Absolutely, just like I'm doing right now. I won't leave until it's done, okay? Absolutely. Oh, thank you, Jim, on the software. I really appreciate that so very much. I really appreciate it very much. Sometimes the zones are close together. Is there any way to disregard a zone? Wonderful question, Alvin. Absolutely. One more question, and I'm going to get out to the charts where we can go ahead and get started. Just want to say, well, oh, thank you. I appreciate you answering that, Gator. Thank you so very much for that. Yeah, don't push my envelope, Chris. I'm not cooking an extra turkey for you. You know what I mean? Oh, man. Oh, thank you so much, guys. So kind of you. Okay, some questions that I left out. One of them was gold. I told you we'd take a look at that. Oil. Let's do that. And then how to disregard some zones. Absolutely. Okay, so we were going to take a look at gold. I keep saying that. Oil. Let's just do it right here then. Okay, let's go ahead and take this over. We're going to go to oil. Love the oil markets. Okay, just as you see here, though, I was actually just looking at a long position on smaller time frame. But anyway, that being said, you know, won't really go into that, I guess. Here's what I want you to be aware of. Okay, my long position puts us up into this area. Let's use our volume analysis. As you can see. Okay, we're coming up into the lightly shaded area and predominantly this top portion here. This is driving my eyes up to the top area of this zone. What does that mean for us? My belief is that we will go up and penetrate into this zone. At minimum, my expectation, okay, would have been into this shaded area here above the 47, 41s, but we've already hit that now and we're taking away from it. Okay, if we get up here, I don't particularly care to come up into this tiny of an area here. My belief would then be that we would go above that. Okay, that's how I use my volume information. Let's look down here. Notice we have some open area here like this. A lot of unfilled orders in through this area here. 4488s, 4497s. Okay, am I going to try to be that specific on an entry? No, I am not. But this is the area that I'm going to watch for. Overall, this is a daily chart. I'm not trading it anyway, but I do use the volume profile analysis on the smaller time frames actually for more of my entry, type of scenarios. Okay, but yeah. So let's find out right now. Let's kind of look at structure here and let me lay it out for you from what my thought process is. Okay, remember, I can be proven wrong. I'm subject to it at any time. Markets are subject to change at any time, but until they do, I have no reason to think otherwise. Structure is down. Lower lows, lower highs, lower lows, lower highs. However, scrunch up the chart. Let's add some more data. If you don't have enough data, keep doing it until you do. Notice how fast those zones load, by the way. Does everyone see how we've revisited this area below? Look at that order flow information. Okay, if we take this out of the equation, okay, you'll see how it starts to bring your eyes into the lower area here. Okay, so what I'm really doing is starting to look at these lighter shades of gray there. That's where I expect price to go. Okay, so let's put it this way. All right, so right in through here, you see where the lighter gray starts? Down to here. That's going to be where I literally think price can turn. Okay, look at this structure low. Tags it. I want to be below that. All right, excellent. Okay, so as we cut, there we go. Okay, so notice how we touch it, but now our volume information has changed. It has adapted to the new information. Okay, I still have the belief that right down into these, into that pretty much that same area, we still have lots of potential volume there. Absolutely, want to pay attention to that level. So that being said, it's a strong area. Okay, but we are pushing ourselves back up to resistance meets supply. Here's what I want to do. Would I rather be let's go back for a moment. Would I rather be the buyer here and now today, knowing that we've just stepped into our volume territory where a lot of unfilled orders could be, and we've reverted to resistance? Not so much. Okay, not so much. All right, what I'm going to do is go to my smaller time frame. Let's go down and look at that 4-hour chart. Let's get rid of that. That was what I showed you guys earlier. All right, let's look at that 4-hour chart. Okay, remembering what we said up here the whole time. Let's anticipate the right side of the chart. Okay, make sense? So here, what do I want to see? Let me see here what I have on just to make sure. I want to show you guys show you guys everything. There we go. Okay, so here's what I want to see, right? We have significant demand below. It's, it's very strong. And so what I want to do is, if I'm going to look to sell this market, I got to prove to myself, okay, that we can, because look at what's happening. Reverting into demand. This is smaller time frame demand. Let's see if I know what I'm talking about. Okay, you see this down here? See this down here? Absolutely. So let's go define that area. Do the rectangle, I suppose. Actually, you know what? Let's do this. All right. So let's just look at this area for what it is. That's a strong area there. I believe we can go a little bit below it, but let's not get into that right now. So let's go down in time frame. Right? Do you see right in through here? Demand level. Demand level. Okay, so you absolutely see that on the smaller time frames. All right. So again, what I'm saying is, right in through here, I want to form that supply that takes out the demand. And if I can do that, then absolutely. But right now, here's what I see. I have no reason to think otherwise. Now, am I interested in taking that position? No. Why? Because look at where I am in the larger time frame. Okay? But I want to be mindful of it, and I want to watch that. Because if we can take it out, guess what just happened? Supply exceeded demand. Simple as that. Okay? Simple as that. So I want to see supply exceeding demand. I want to see us reverting back into supply. That's what I want to see. Okay. The next question I think I recall was, there's levels sometimes. For example, you'll have multiple levels. Can I differentiate them? Absolutely. Multiple ways to do that. But our software is, again, guys, it's very extensive when it comes into the functionality. Notice we have our active zones, which include all of the 3 types of zones here, and an additional original zone. So there's technically 4 types of zones that we're working with here. Okay. We have active zones. Let's leave those on. That's everything you're going to see on the chart. The fresh zones. Okay. None of these zones are considered fresh. You can see me flickering them on and off. Nested, however. So the answer to your question is, can you get rid of them? Absolutely. It's a simple toggle right there. So if you don't want to see the zones, nested in other zones, that's okay. You can just turn them off. Absolutely. Okay. Hesitation zones. What is it? Notice down there. You see that? Okay. Down at the very bottom here. Take note of this. Okay. Hesitation zones. Hesitation zones are the zones that think of them as continuations. All right. It's a hesitation in the context of a direction, and that didn't formulate, an extensive pullback, and that's what you have there. Another way to do it is I can use my delete button and just simply remove it. Not only does that remove it not only does it remove it visually, it also removes it internally. Therefore, I can, and this is pretty cool, guys. I spent a lot of time on this. The SD model, for all intents and purposes, I can literally, it's fully automated, yet I can literally change the orders. I can change the size of the zones, and all of it will work in real time. It will actually adapt with me. Okay, if I delete a zone on the SD model like I just did, like that, boom, it will cancel the order and cease to exist. Pretty cool. Right? Does that answer your question there, Chris? I think that, hopefully that was it. Or maybe Alvin that asked that, or, okay. Thank you. There you go. Okay, just pointed out some things there. Just an FYI, I had a supply zone on the oil 30-minute. Let's take a look. We're on the 30-minute chart from 6-7, 47.64s. Let's go do this. I want to see your zone. Okay, so we're going to go 47.64s. I love it. I love that you're sharing this. 47.64s to 47.79s. Something to notate here. There's no way that I can show that because I don't have enough data on my chart. Okay, if you don't have enough data on your chart, there's simply no way. Not to say that there's going to be one. I don't know, but let's go back and find out. Okay, notice the efficiency there. Look at that zone. Great job. Nice job, Chris. Nice job. I'll tell you that our zones were a little bit more accurate on it, and that's okay. Okay? Sometimes you're going to be more accurate, all right? Nothing's perfect. But I'll tell you, that's how accurate they can be. Okay? You're seeing that in real time, so hopefully that's advantageous. All right? Notice that demand is yet to get broken. All right, guys, any final questions for me? Thank you, Dave. I appreciate that. Nice to see the chart open for sharing ideas and the best practices. That was in the Q&A. I appreciate that very much. Luis, what's the difference? Oh no, how much difference in the NinjaTrader 7 power zones from a couple years ago into the NinjaTrader 8 suite now? A lot. Not so much on the algorithms as far as the zones. But I mean, just extensive. I will tell you this: they adapt now. I've added multiple new algorithms to make them filter and to make them adapt better. But as far as the price recognition, the volume algorithms, all of those, they remain the same. I did enhance the volume algorithms a little bit. I will tell you that. I forgot about that. But yeah, I mean, as far as what you're going to feel and see, I mean, they're way more extensive, right? I mean, think about it. You have, you can define market structure. You can color the background via the market structure if you want to, right? We have our power zone here. We can define things like the origin of this. I want to know where the buyers are most likely to step in, like in this area down here a lot, close to the origin of the move. Okay, you have all of that. You have your fib zones built in. These are used as draw tools. You can do things with them. We can do this. I can define only that area. I can control that from my drop-down menu, right? Okay, so I can extend that if I want to. Absolutely, for future support resistance purposes. I can turn those price labels on or off. Notice right here it's flickering. I can turn the volume ratio on or off, things like that. You know, the data box, that is new. Okay, this defines my entire trade plan for me based on like the SD model right now, for example. It will show this exact information. Not only that, but it shows you down here a barometer of bid to ask volume data, order flow analysis right there, real time. You can see the shift of momentum occurring. And you see how much volume is getting filled here? A lot, right? All of this is included in the zone suite. Time frame analysis on every piece of this. The zones, okay? Price labels, resizing, zone buttons, all that, of course. All the different zone types, altitude grid, of course, same thing we've always used right there. Okay, am I high or low right now? Okay, so on and so forth. All the data, I can only show what's on the chart if I want to determine a swing or trend. Fib zones again, market structure, power zone. Trail stop, if you want to use this. Do I use it a lot? No, I do not. Okay, but I did add that in there for SD model purposes and for people who just really want to use that. The same goes with the trend ID. We can paint the bars in the context of the market if we want. Do I use that? Not so much. Put it in there for the purposes of automation, right? As well as people who want to reduce subjectivity in that regards as well. So you can form your own trading plan around this. Pretty cool. I did also automate the trend lines. Okay, so we can show that. As you can see, the most recent trend line just got broken. This is on a small time frame. Don't forget that. But guess what? If I want to show that from a larger time frame, look at that nice trend line right there, based on market structure. Wonderful, right? So all of that is automated. You can show them historically if you want to. Okay, so there's your downtrends right there. Things like that. Volume profile, I can toggle them on or off, you know, demand and supply, same with volume ratio. Yeah, so it's very extensive, and I would say, obviously, I feel that it's, you know, a lot better, but it's like anything, right? When Apple comes out, oh, well, I'm not comparing, I wish I could compare to Apple, but I'm not comparing us to them. I'm just saying, as Apple comes out with a new product, right? The iPhone 7, iPhone 8 is going to be, it's going to be, you know, more enhanced, right? And that's kind of the same way I look at this. Alvin says, so you don't trade in the opposite direction until the opposing zone is broken. Okay, this is I'm glad you asked it in that way, Alvin, because let me help you guys understand something about this. That is a loaded question, right? It's a loaded question because define direction, define the time frame that direction is on. Do you know what I'm saying? It's a loaded question because I don't just use one time frame. I use, you know, up to 3. So while I'm not trading in the direction on one time, I'm always trading in the direction on the other time frame. You see what I'm saying? So it's kind of a loaded question, but I'll answer it in as methodical of a way as I can. Okay, I define the direction overall on my larger time frame. I drop to a smaller time frame to see if, well, let me backtrack. I actually define the direction and my supply demand levels, okay, on the larger time frame. Absolutely. That's going to tell me when I should expect smaller time frame volatility. Okay? Now, when I've done that, I go down in time frame and I say, should I be the buyer looking at this time frame, the daily? Should I be the buyer here? No, you're coming into supply. Okay? All right, so should I be the seller? Well, no, I can't sell into that daily supply, right? My account doesn't allow me to do that. So what can I do? Well, I can start paying very close attention on the smaller time frame. So whereas I'll be overall with the direction here, okay, when I go down in time frame, that direction is going to change. Look at this. Remember how the direction was down? But look at this. It's now up. You see what I'm saying? But what I'm trying to tell you is that I go from the larger picture using the overall direction in line with my levels. I then come here and I line that up. I say, what's the daily time frame telling me? It says to potentially look for shorts, but I'm still in an uptrend. So no way, Jose. Okay, so for intraday purposes, what could I do? I could say, well, now I'm going to use the 30-minute as my larger time frame, right? Let's do this. 30 minutes in an uptrend. As long as, let's pretend for a moment, okay, while there was, obviously we had supply up here, but let's pretend for a moment that we're in an uptrend here, and there's really nothing to stop us. A pullback into larger time frame demand, okay. So here's what I'll do. Okay. Okay, you have smaller time frame demand. All right, and I will wait for, that doesn't look, oh, it's oil, okay, yeah. So I will wait for the smaller time frame demand to start to form, and then there you go. Okay, so then I'll look to buy on a very short term, right? Why? Well, because that 30 and the 60-minute chart's technically in an uptrend. But if it changes, guess who's going to be holding their position even longer? Right? Because now I'm not going to be entering on a 10-minute chart. I'm going to be entering on a 30 or 60-minute chart. See what I'm saying? Make sense, guys? Hopefully that helps, Alvin. I hope that I could have been as close to what you were asking for as possible. If not, hey, look, man, give me a call. You know what I mean? I'm here to help. I'll definitely be happy to help you. If I didn't answer a question to your liking, then get in touch with me, and I'll do my best to get that sufficiently answered. Absolutely. Okay, trying to hog tie you in a guarantee, Will. You can't do that. They don't exist. I'm smarter. Oh, he says. Well, maybe you're saying you're not. Yeah, my fault. I completely misread that, right? But yeah, you're absolutely right. They don't exist. But yeah, he says, I'm not trying to tie you into a guarantee, Will. I'm smarter than that. Of course you are, Chris. I know you are. I'm also beyond determined to become a full-time trader at some point. I'm not sure when that day comes. I'll ever feel comfortable enough to let my trades be automated. I don't blame you. No problem with that. All this being said, has your system, say on a monthly basis, always been profitable? I can't tell you that, Chris. I honestly can't tell you that because I'm in the midst of doing it now, right? When we made massive changes, I can tell you this. We have members who are also trading it, okay? Maybe you ask them. I wouldn't encourage you. Yeah, absolutely. And Chris, you had it right in the beginning, man. Try to think about it. I always encourage people to, for example, let's say that you get the zones, right? I encourage people to understand what they're doing, not to let a robot do it for you. Okay. And again, I've yet to be able to perfect it. I can't perfect it. Not yet, at least. There are going to be times where I'll do something, maybe I disregard a trade because I'm against what I believe the direction or so on and so forth. Okay. So I firmly believe that understanding what you're doing is much better. So then, however, you can simply utilize the zones because you already know how to use them, right? So you have a sense of automation with intuition. I think that's probably the best way to go. All right. Hey guys, listen, it has been a blast today. I'm just going to stick around to see any final questions. But otherwise, I'll end on the session. Really enjoyed today. Really enjoyed you all being here. And I want to thank you for your time, most especially. I hope that it was of benefit for you. And if you have any questions at all, guys, I hope you know that you can certainly contact me. I want to thank you guys if you're in the room for the comments on the YouTube video. Thank you so much. Thank you so much. That's all I can say to that. I really appreciate it. It made me feel very, very good. I am trying to get back to things, become in some sense of normalcy again. Really appreciate that very much. Excellent, guys. Chris says, I do all my plotting manually, and thanks to just your free stuff and some other resources I've found, I've turned my trading around substantially. Chris, gosh, man, congratulations. That's amazing. I'm so happy for you. Absolutely. Will this available be in recording later on the site? Yeah, probably I'll most likely email it. But Alvin, of course, you can contact me anytime, and I'll get it to you. Hey guys, all right, cool. I've made it to the end of the questions. We got a nice trade on gold today. Was lucky enough to see that in the room. You got to see the objective versus subjective. You got to see the performance on the SD model since the 12th, and you know, I think you've gotten to see a lot today. I hope that it was beneficial. I really, really do. Notice here how we're continuing to drop a little bit. Remember what I said, if we don't form new demand, we've already tested this one multiple times. I mean, it's as simple as that. God bless you guys all. Have a fantastic rest of the day, and I hope that I hear from you all soon.